Thank you, everyone, for joining us today for our inaugural Myth-Busting and Retail Banking webinar. We thought we'd have some fun with the data that the immense amounts of data we collect from working with our customers and thinking about what myths we might bust with some of that data. So if you've ever attended a Micronotes webinar, you'll know that we are not terribly wordy, so we will have you out of here in less than 30 minutes. And we try to jam as much data analysis and useful information as we can in those 30 minutes. So today, we're first going to talk about some myths in digital cross-selling, specifically in the financial services space. Then we're going to talk about, and a lot of the myths that we bust are based upon conducting hundreds of thousands of interviews with our clients' customers. And then we're going to show you how you can interview your own customers without spending any money, at least getting started with that. And then lastly, we're going to provide you with some cross-selling tips based upon the research and data that we have collected over the years. So we hope it'll be a lot of fun. As Parker mentioned, we'll do questions at the end, and we'll try to answer those as best we can. So if you're not familiar with Micronotes, we're a cloud-based marketing automation company. We operate primarily on the secure side of online and mobile banking. That's behind the login. And what we do that's a little different is we leverage fast automated interviews and machine learning processes to engage with customers through the digital banking channels. We don't advertise, we interview, and that's a fundamental distinction between sort of what we do and what the bulk of the digital advertising community does. We don't presume that we understand exactly where every customer is well enough before we actually deliver a message. So the first assertion we'll examine is this notion of I know why my customers won't establish direct deposit with me. So first of all, let's talk a little bit about direct deposit. So everyone on the call here is in the banking business, I'm certain. And intuitively understands that it's a good idea to get your customers to establish a direct deposit relationship with you. But why? Well, we've done some analysis of customer data, and if you hold all other variables constant, a customer with direct deposit has a 0.42 times odds of attrition versus a customer who doesn't have direct deposit, and a similar ratio, not quite as good, but holds if you begin to add services to a banking relationship. So so what does that mean in practical terms? So in practical terms, what that means is that let's assume the odds of attrition for your institution are 10%. If you are successful in adding direct deposit to a particular customer's portfolio of services, the odds that customer is going to attrit drop to 4.2%. If you add, which is tremendous and a very good idea, I would add. If you add one additional service, you'll drop the odds of attrition of that particular customer down to about 7.3%. And it's a geometric progression. So if you keep adding services, you drop down to 5% and then below 4%. So needless to say, it's a very good idea to establish. The one thing you can do is to reduce attrition with your customers that doesn't cost them anything, maybe a little time on setup, is to establish direct deposit. So let's see. If you guys actually have a pretty good idea of why. What do you think the #1 reason why customers won't establish direct deposit is? And here are some examples. Go ahead and take the poll, and then we'll show everyone how you did. So go ahead and take the poll. if you would, please. Very good. Very, very good. All right. Everybody's almost done taking the poll. All right. We've got a clever group here. Good. All right. Let's look at the results. 80% said has direct deposit with another FI. So that would be the number one answer. And the number two answer would be no need for it. Well, you guys are pretty good, I have to admit. The actual results are pretty much what you guys said. So the number one reason why clients won't establish direct deposit with you is they have it with another financial institution. So you guys are pretty smart. Well done. Congratulations. But the number two answer, which is very close to the number one answer, is they don't see any need for it. And you know, the poll results were only 13%, but in fact, as you can see here, it's neck and neck with has direct deposit with another financial institution. And the number three is, you guys correctly pointed out, would be prefers paper checks. So the point of the matter is that you need to know which customer has which objection in order to overcome that objection. So, for example, it would be a bad idea to offer incentives to a client, for example, to establish direct deposit, who is not sure what direct deposit is. So, obviously. So the point is that you can learn an enormous amount about the objections that your customers have by asking them, and that's precisely what we do. And then we can go back and we can message intelligently and in real time around the specific issues that that particular customer has with establishing such an important relationship builder as direct deposit. So well done. You guys are clever indeed. All right, so number two assertion we'll examine. Customers determine their needs from financial institutions. So it turns out that there was a survey done by the CEB in 2015 that suggests that actually only a small fraction of customers, particularly digitally enabled customers, which is where all customers are going, determine their needs from financial institutions. As you can see here, the media plays a big role, friends and family play a big role, as do other sources. That is problematic because if only less than a third of the time they're getting information from FIs, what percent are they getting from their own FI? It's something less than that. So the good news about this one, even though it is in fact a myth that they're getting their financial information and their requirements from their FI, the great news is that if you actually ask customers what their needs are, they will tell you. So this is real data. So if you ask a whole bunch of customers what their needs are, they will tell you. So a third are going to need to pay for college. About a quarter are going to be moving when you ask and may need help with any number of things. They may need a mortgage. They may need to be reminded that they don't have to sever their banking relationship with you, that you have you can support them where they're moving to. About a quarter are retiring, and they may need help with a number of services. They may need retirement planning services. They may need advice, all of which you can provide if you know, in fact, that your client is going through that particular life event. About 11% will be involved in a job change, and happily, about 7% will be having a baby. And a job change might mean an opportunity to help that customer move their 401k assets over to their new employer, and having a baby may indicate that it's time to actually sit down and put together a financial plan, establish perhaps a retirement account, establish life insurance, all of the things that the joyful things that come from becoming a parent. So it's the darndest thing, but if you ask them, they will tell you, and you can make a real-time, intelligent offer based upon what individual clients need. So we're losing touch with our customers. So we're going to run another little poll here, and this is a really simple one. Just do you feel as if you were losing customers, or if you're not a bank and you are a fintech company, just do you think your customers are losing touch with their customers as people move from the branches into the digital world? Very, very good. Thank you for those. So we'll go ahead and close the poll, share the results. So most people overwhelmingly feel like they are losing contact and with their customers. So interestingly, if you look at the data, and this is Accenture data from 2015, in the United States, people are connecting with their bank about through various channels about 15 times a month. And primarily that contact is coming through internet banking. It's coming through the cash ATM, to some extent through mobile banking, and less through the branches. But the point is that 15 times a month is a wonderful number of contact points with any customer, most of which, as we see, are coming through the digital channels. Now, if you so that's actually a myth, and let me tell you why I think it's a myth. It's because some of our clients, and this is 20 months of data. So some of our clients are actually routinely interviewing a quarter of their entire digital banking customer base a month. So this is 20 months worth of data, so this goes all the way back to January 2015. What we're plotting here is engagement rate. Engagement rate is essentially the fraction of customers who, unique customers who log in any given month. How many of those people actually interact? How many of those interview with the bank? And as you can see here, we've conducted 371,000 interviews over 20 months, and there doesn't seem to be any sign of customers falling off that trend. And the amount of information coming back from all of those interviews is enormous, as you would expect. And fortunately, all of that data is coming back into our databases and is informing machine learning algorithms that are making the next set of predictions about propensity for a particular customer, for a particular product, better and smarter, fewer errors. So I would submit that this data suggests that there is no reason to believe. I can't imagine a time when in the history of banking when when the banks were able to have a conversation about needs and preferences with 25% of their entire customer base monthly, every single month for the last 20 months. So it is doable. If you have the right technology and dedication to the engagement, you can do it. So the last thing we're going to cover is so there's no such thing as a free lunch. Maybe there's no such thing as a free loan either. But in fact, there is now such thing as a free loan. And I'm going to tell you how, very briefly, how you can actually book loans without spending any money. So here's how it works. You go to micronotes.com, and we'll go to micronotes.com here, and you click on the free trial, and you can read about the free trial here, and then you can start the free trial, and then you register here, and it'll walk you through a few steps, which will enable you to do this on your logout landing page. And this is simply a question about what your customers' needs and preferences are and what's going on in their life. And if you do that, here are real results from doing that. So one bank decided to do this after hearing about it, and they started on the 1st of September. And this is only the first 14 days of production with the free trial. There were about 1,700 average logouts per day, and this data is very recent. This is this month's data. So what you can see here is just by asking a few questions, this is totally untargeted. It's not using all Micronotes big targeting systems and machine learning and all of that stuff. It's just asking customers about their lives. So what you can see here is the way the customers segmented themselves out were, here are 58 people who plan to buy a car and are planning to, and decided to learn more online about an auto loan. So we know the conversion rate of our auto loan leads, which is about 8%, so we expect that this bank will see about 5 sales out of that. Those sales are worth about $2,000 in interest income each, and that's about $10,000. We have 9 people who are getting married, which is terrific, and they are interested in learning more about a personal loan. So they were automatically taken over to the personal loan information page. Those loans converted about the same rate based on our data as auto loans, and so we expect one of those to come through, and that'll be worth about $2,000 in interest income. Quite a few people are planning to purchase a home this year. I assume that's because we've got terrifically low mortgage rates right at the moment. And these clients all asked to be taken to learn more about the bank's mortgage products. Those convert at only about 1%, and so we expect one of those to come through. It'll be worth about $21,000 in interest income over the life of the loan, which we only calculate to be about 5 years, even though it's 30-year loan. It may get rewritten. And the last is about 129 people are planning to remodel their home this year and want to learn more about a home equity loan, and they were automatically taken to the HELOC loan page. And that'll be about 3 of those will come through, we expect, and that's about $6,000. So in the first 14 days so about halfway through the free trial, we would estimate that the total contract value is about $39,000. So there is such thing as a free loan, and there's no obligation for this bank to move forward with Micronotes. But what we're trying to do is just enable as many banks and credit unions as we can to try interview marketing and see for themselves what kind of lift they can get, and really equally learn about their customers' lives and what are the big things that are going on in their customers' lives, and how can you help them make those transitions more efficiently. So 39K, not bad. So here's what you need if you decide to do our free trial, and I certainly encourage you to do it. Why wouldn't you? You will need a logout landing page. You will need a webmaster to actually drop a snippet of code in to your logout landing page. You'll need a marketing specialist. The marketing specialist will actually tweak the preloaded interview that's in there, add the landing pages where you want the app to take your clients based on how they answer, and you'll need about an hour. It takes about an hour to get the code in, to get the code tested, and finish up loading the landing pages in. And then you can hit the launch button and you're off to the races, interviewing customers and pointing them to the resources that are available on your website to help them through their lives. All right, so we're in the home stretch here, and a few cross-sell tips, if I may. Number one, so on our website, under the blog setting, under the blog navigation menu, you'll find a ton of blogs there. All of these are thoroughly researched, essentially data analysis. We're kind of data-driven people, so we rely on facts and data. If you actually look at the problem of growing a financial institution, it turns out that the optimal relationship between for profitable growth is 70% spend on acquisition and 30% on cross-sell. Of course, each bank will vary a little bit depending upon what their particular characteristics are, but that's a very good rule of thumb and something I recommend you keep in mind. If you'd like more information on that, please go to our cross-sell series on micronotes.com, the blogs, and you can read about how that analysis and optimization was done. Number two, message less and ask more questions. This notion of sitting around watching advertising collect, a 0.1% click-through rate, when the click-through rates on, for example, the click-through rate on the free trial is about 20%. Sitting around, waiting for someone to click on advertising is just a bad idea. And furthermore, assuming that you know why each and every one of your customers is not doing what you want them to do is also a bad idea. Ask them; they will tell you. It's a beautiful thing. We recommend that you actually market services first, starting with direct deposit for the reasons that we talked about earlier, and then move into your products. Because first things first, make sure to retain your existing customers, and by all means, avail them of the wonderful e-services that financial institutions offer their customers, which are huge time savers. And work on overcoming those obstacles. I mean, really, you prefer paper checks? I mean, let's talk about that. So figure out who those customers are and why they're objecting, and then if you want a message to that, that's fine. But certainly start with the easy things to sell, and then move to the more challenging products to sell, like mortgages and large loans. And of course, in today's environment, don't add accounts without customer permission. So I want to thank you at this time, and I'm going to turn it back to Parker for any questions.